Hi there folks, welcome to this week's weekly Forex forecast. It's Monday the 28th of June. In case you didn't know, my name is Andrew Lockwood here from forexsignals.com. Okay, so let's start off by talking about what happened last week. Now you may have noticed if you've been trading the markets that the S&P 500, now that's the top index of the top 500 companies traded out in the US, we hit all-time highs. That basically means there's money moving into the stock market, the higher risk assets, and that has ramifications on the Forex markets, as we well know. Times of risk on, typically you see the safe haven currencies, the low yielding currencies, the Japanese yen, Swiss franc and so forth, they come under pressure and the commodity currencies tend to do better. So the stock market was lifted for a number of reasons. Basically, we had some weaker data out in the US on the inflation side of things as well, which basically means the Fed might not have to move interest rates or withdraw stimulus as quick as maybe previously thought. Also, you got the 1.2 trillion infrastructure package going through with Biden and so forth. So all this optimism is surrounding the stock markets and global stock markets as well, pushing all the indices up basically. So it is really a time of risk on at the moment. Also saw oil prices hitting the highs as well ahead of this week's all-important OPEC meeting, which is on the 1st of July, I believe, where they'll be talking about production cuts and so forth, and of course that affects the currencies like the loonie, the Canadian dollar and so forth. So quite a lot to look at there. But also we've got non-farm payroll. Non-farm payroll this week, it is the most important data release of the calendar month. It basically tells us how many people are employed in the US. And of course this is an early sign of inflation. Clearly, the more people that are employed, the more people that have money. More people have money, they're spending money, up goes prices go up. Central bank has to move interest rates or withdraw stimulus. So we're always looking at the job numbers. I think they're going for up 675,000. I'll talk more about that when I get onto the screens in a moment. We look at the economic calendar, but quite a lot on this week in that regard. Let's have a quick look now at the momentum meter. This is the currency momentum meter or strength meter, call it what you wish. You can get this absolutely free here at forexsignals.com. Doesn't predict the future, gosh, I wish it could, but it basically tells me exactly where the money is going at the moment, what currencies are strong and what currencies are weak. I don't know how anyone can trade the currency markets, Forex markets, without using one of these as a guide. You see here the bronze line, brown line, whatever, that's the Japanese yen. You see that's been coming under pressure. As I highlighted to you, the risk on stocks are going through the roof. The yen is coming back down. The dollar is coming back down as well. The yield's been sort of like capped around the 1.5 level. Again, the sort of negative, well not negative, but the not so buoyant inflation numbers out last week in the US basically means that maybe the Fed don't have to move as quick as some might have thought. So the dollar's been coming back down. That's the green line. Also saw this white line. Yep, the white line is the British pound. We had the Bank of England a rate decision last Thursday. That basically highlighted the fact that they're not going to be sort of tampering with their stimulus at the moment. They're still going to continue with their QE program. That's basically buying bonds, putting money into the system. So the pound didn't really like that. And of course, we're seeing an uptick in COVID cases as well. So a little bit of uncertainty coming into the pound. That's why you see the pound here at the moment, one of the weaker currencies. And you see here these the purple line, that is the Canadian dollar. Canadian dollar is getting stronger because oil prices are getting stronger ahead of this meeting later on in the week from OPEC, as I say, talking about production cuts. Commodity currencies, I remember I said to you, risk on means the commodity currencies tend to do better. Commodity currencies, that's the Australian dollar, the New Zealand dollar, Canadian dollar, of course. See here, the commodity currencies, they're doing reasonably well at the moment. The Aussie's quite strong. New Zealand's quite strong as well. If you're following trends, clearly what you want to be doing is be buying the strong currencies and selling the weak currencies. And that's why this is, I think, so important. Let's have a quick look at what we're looking at this week. Now, these are just biases. These are not trade signals. You don't often trade these off the bat. You need to apply them to your strategy or whatever your strategy is. But these are basically the biases that we are looking at. Okay, we're looking at a short euro against the US dollar this week. There's some trend line supports there that we've broken. I'm going to show you that in more detail when we get onto the screens in just a second. But the euro now has broken through some key structural support, and potentially now there is fresh air all the way back down to the next structural support level at 1720. I'll show you on the charts in just a second. Also looking at a short trade in the FTSE 100. Okay, so the FTSE 100 COVID situation is worsening out there. We're looking for a trend support there at 69.60 for this week. Stocks, as I say, pound, so that the FTSE has been on a reasonably good tear to the upside, but does seem to be coming into some resistance now. Okay, I'm looking at a short New Zealand yen trade. We've seen in this currency pair a big V-shaped pullback from the lows. Now we've almost completed the pullback on the V-shaped recovery, if you like, met some level of resistance. We're seeing price action that could indeed show or indicate that that V-shape is now running out of steam. So we're looking for entries to the downside. But again, if the stock markets carry on pushing on, then the yen will come under more pressure. So we need to pay attention to that. But that is one of my biases this week. If the stocks do indeed stall at these levels with the support 77.50. Again, I'll show you that on the charts in a second. Max is looking at an Aussie yen short as well. It's going to retest the 50 EMA, that's the exponential moving average, and a wave down to 82.50, which he sees as the path of least resistance. Right, what we'll do now is jump onto the screens and look at some charts in more detail pertaining to these, and also I'll look at the economic calendar to see what's out this week. Come on, let's go. Okay, so first off, let's look here at a price chart for the euro against the US dollar. It's the most actively traded currency pair on the planet. What we've seen in the last few days is a breach of previous resistance, new support. It's a structural level. Price has broken through this structural level of support, but interestingly now, it's also broken through this trend line support. It's broken through the trend line support back up to retest. Now we think that the bias, the path of least resistance here now is to the downside, that any price action above here is going to be met with more resistance than the support zones down here. So we'll be looking at potentially selling the euro against the US dollar, looking for trade entries to support that bias. Okay, and this is the New Zealand dollar against the Swiss franc. It's got my attention because of this bit of price action that you're seeing here at a key structural level of previous support, acting as resistance. Friday's candle, if I can just make this a bit bigger for you, showed a definite price rejection of this zone with the trend. Now today's candle at the time of recording basically showed a false breakout above Friday's high, and now it looks as though we're trading lower. I'm looking at a break of Friday's candle to the low to confirm this downtrend, which has been in play now for a while, pretty much since the end of February here on the daily chart. So key level of resistance being respected by these high wicked bearish candles could indicate the move to continue down low. We'll be watching that one as well. Let's have a quick look now at the economic calendar and see what's up for this week. Okay, so this is the economic calendar. As I say every week, you should always have one of these to hand. You can access this one by going to the forexsignals.com and scroll down to the bottom. You'll see economic calendar. As you know, the way to read these, you look to the right of the screen. Anything that's there in red is deemed to be high impact news. It's likely to have a bigger impact on the markets. Even if you're not trading the fundamentals, then I do think you should be aware of the news that's coming out this week, if anything, to keep you out of higher risk trades. Okay, so we've got some red data here. That's basically China data. I don't look too much at China data myself. It does sometimes have an impact on some of those commodity currencies like the Australian and so forth, but I don't spend too much attention on that this week. Quite a quiet week, in fact. We've got quite a quiet week. We've got a bit of inflation data out tomorrow in the Eurozone. You'll see here high impact news, consumer price index. It's basically inflation. If you're in doubt, by the way, of what a data release is, you just click on it. It basically gives you a description of what it is and how the read is likely to impact the markets, bullish or bearish or so forth. So there's some education right there as well. So keep an eye on the European inflation data tomorrow. We've got, I say, not a great deal out until maybe the latter part of the week. We've got Lagarde speaking on Wednesday. You might need to pay attention to that. She's the central banker. Often when they speak, gives us clues on what's going on. A bit of PMI data out as well in the Eurozone. Always like a PMI data. Stands for Purchasing Managers Index, if you didn't already know. It's like a survey. It's a forward-looking data release. Central bankers I know love looking at PMI data because, as I say, it's a leading indicator as opposed to a lagging indicator. Okay, so basically we've got some PMI and ISM, again, survey data, forward-looking data, PMIs out of the US later on in the week. Now, we do need to pay attention to that. It is billed here as a high-impact news event as well, high to medium, because it just basically gives us clues on what the business leaders, manufacturing services are thinking. Are they employing more staff? Are they investing, and so forth? All these have impacts on inflation, as you might know. We've got German retail sales out as well on the 2nd of July. That, of course, is ahead of the all-important US data at the end of the week. It's non-farm payroll. They're going for up 675,000. An average hourly earnings and so forth. So we do need to pay attention to that. That will be a market move. It is the biggest trading event of the month, of course, and I'll be streaming it live as per usual. It gives us early clues on inflation and early clues on what the central banker might have to do. And obviously, wherever interest rates go, the currency should follow, which is why we pay attention to these releases. So make sure you check out the calendar. Make sure you've got this bookmarked on your browser so that you never get caught out by any unexpected news events. The last thing you wanted to be doing is taking a trade and then having a big news release and you get stopped out before you even had time to place the trade in your journal. Okay, so I hope you found that useful. Now, if you want to take part in our regular daily live streams, you can do so. We are streaming up to 6 times a day, 5 days a week, looking for opportunities, discussing market events and so forth. Got a vibrant community of traders in there, all discussing trading opportunities and the like. We're also streaming live non-farm payroll this Friday. So why don't you come over, try it out, see what you think. You can do so by hitting the link in the description tab below. If that is not your thing, that is not a problem. I'll see you next week and have a good week.